Here we are looking at the top 30 momentum companies on ASX and the top 30 launchpad stocks. That's often where the momentum companies start before they break out. So we're trying to identify the next market leaders. When we do this, we're going through the charts. When I say we, Gary's done the heavy lifting. Gary Glover from Novus Capital has been through the two lists and identified the market opportunities, the trade setups that he's really learning from, and well, whether there's a volume indicator or what it is, he's going to share that with us. Now, this list, we share that with the members on a Thursday. So they get a sneak peek, they get to jump in there and also send through some requests and say, hey, Gary, look, this is on the list. I'd really love it if you covered that one. Quite often, he's already going to do that, but we do have some requests and we will cover them. So, that end, we've got the lists, but then we get the secret little extra bit where Gary also helps us and identifies, hang on a second, there are a lot of gold miners here or a lot of uranium companies or property stocks. And often if Gary's able to see that in the launchpad, many times it ends up being the market leader 2, 3, 4, 5, 6 weeks later. So, bit of expectation on Gary, but he's been doing it very well for many years. So we say, good morning, Gary Glover. How are you?
I'm good, Chris. Yeah, we won't be covering stocks that have been going down for the last 2 months. Okay, so we're here to try and help people, but we're not going to focus on things that are clearly outside of what we're trying to focus on here. So we're trying to focus on stocks that are leaders, that are showing relative strength, that are the stronger sort of stocks, maybe having a pause here. So we're not going to be looking at stocks that are in nasty downtrends. So if you send that through, which we have had a couple of requests, but we're nicely going to say that's not us.
And you've done that. You've done the research on this, and you've just a few months ago you said, look, you've reflected on your own trades and said, no, I'm just going to trade and focus in the top half. And we know from the analysis that works. We know from your own reflection on your own trading reviews that does work. And also, it was great that we got a fair few thanks and comments in the last couple of weeks, because while you were recording this, one of the trade setups you were looking for in the top right explosive companies broke out and you missed the entry. So everyone cheered in and said, thank you for sacrificing yourself to share this with us. So obviously those companies that you're looking at are quite explosive and they will move quickly, and that's where those top right come from. And on the chart here, I guess you've got one of those momentum leaders. Is that this week, one of those ones?
Yeah, it's funny. It's actually a couple of stocks I'm trading at the moment. So I've got half the orders on. So let's hopefully they haven't taken off. They're left me behind by the time we get off this call.
Gary glances off to his other screen. Yeah. We know what he's doing.
Yeah, but I literally, on that sort of trading in this top half there, because I've had the same trading rules for the last 3 or 4 years, but I've sort of been refining them and getting them tighter and tighter, and to the point where I've had my trading rules, like my trading protocols, my trading process. So I've had all these. I've sort of built a library of documents for my trading to the point where it's gotten too many. So yesterday I literally got them all together on the dining table, and I've summarized them and I've put them all together and just streamlined it and got it under like a 3 or 4 pager. And it's funny, sort of trading in the top half was sort of one of those things that I actually have introduced into my rules and process, and just general sort of themes of what I'm trying to stick to. And it was funny, actually after collating that, Chris, I kind of had this sort of, as I was sort of walking out in the afternoon, sort of walking the dog, I thought to myself, I think I'm ready to just relent to my process. So, don't try and fight it, don't try and cheat it, because I did try, I've been pretty good. I sort of haven't really been cheated, haven't really moved too many trades outside of my playbook. But every now and again, I do try and cheat a little bit if I try and get the low cheat. And so I do allow myself a little bit of discretion to get a low cheat away, like maybe up to 5%. So a little, if I think this thing about take off, and it's particularly if there's news generated, then I think, well, okay. But I did this after I sort of ended up trading the VCP, when I got to 10% before the low cheat was actually broken. Just kind of, I shouldn't be doing that. So yeah, you can do 5%, and then you should get your move, and if you don't, you chop it. But I went to 10. I thought, well, I've already, I've broken that little small rule. I corrected it straight away, but it's like, don't. After sort of summarizing it all, I just thought, I'm ready just to follow the process and just give myself over to what I've actually built. And that's it was a weird thing actually thinking that and actually even saying to myself, I'm ready. So yeah, so
that's a nice insight to share. And it's did you walk out of that, or you're walking the dog? If you had the epiphany, I'm willing and ready to relent to this, did it feel lighter and easier?
Yeah, 100%. Yeah, because I think I've sort of been wrestling with this as well, like trying to. Because if you're in the market a while, you build up a reasonable knowledge and you see opportunities and you want to trade them, even though they're outside your trading parameters or your trade book and stuff there. So definitely been fighting a little bit of that lately, sort of feeling definitely a bit of FOMO. But I just sort of came to the realization that, 20 years in the market, I've got a pretty good playbook there of trades. If I just release myself from everything else and just accept that what I've built and what I've written down here and follow the playbook, if I just follow that book, it's probably going to be pretty successful. Might even surprise myself by, performing the best that I've ever performed if I followed that list. And that was sort of, just giving up to that. It's weird sort of saying it, giving myself over to it, but it is. You're having to let go. Get rid of all the other sort of stuff that goes on in markets, because we see stuff all the time, opportunities, and particularly if you've been following the market for as long as I have, you sort of there's an opportunity every day almost flowing through. But you're just like, no, it's not. I've got my book. I've got to wait here, and sitting in cash is like, cash is a position. And that sort of and letting the market lay its foundations and let everyone else, get chewed up while, because there are periods of the market where it's just not really sort of flowing. And it's, you've sort of got a bit of a weird week here. There's a bit of a weird week in that the market's been pretty weak. There was a big down day this week, 150 points or something on those days. So that was quite strange for me, because I sort of had fairly decent sized positions on, and I didn't really get smashed. Like normally, if the market was up 150, and I'm trading some pretty strong momentum names, so I'm probably getting murdered on those days. So I didn't get murdered. I sort of like, it was this week here, I just sort of like, everything was just pretty tight. It was just sort of like everything I was sort of trading seemed to be holding up, but it was dull. There was just nothing happening in them as well. So apart from my one little overstep, everything else just stayed pretty tight. So it was just a bit of a nothing week for me, really. Sort of like probably lost a little bit of money, but not a lot. So yeah, you got to take that home and go, geez, that's pretty good. It means I'm looking in the right areas here in this process. I just got to stick with it. So yeah.
Nice. Well, I take it part of that process is that you've refreshed, looked on the dining table. Where do these momentum companies fit in that process, and is this part of your shortlisting?
Yeah, I just saw this one's pretty interesting there as well. This is James Bay Minerals. So it's only been around for a little while. So this has obviously been flying here. So look, you might say it's pretty hard to sort of trade that. There might have been a game-changing event in here. It did get undercut, which might make it tough there. I know if you watch that episodic pivots, there's a really good episodic pivots visit there where someone's quantified all those EPs, and like one of the sort of suggestions is that they do, I think about 40% don't undercut the opening day. So if it gaps up more than 7% on some pretty good news, generally earnings or something significant for the company, 40% just keep going, which is a pretty good stat. So they'll at least rally for like 3 to 5 days. I think if you allowed yourself a 1% stop, it might be something up to around 58% might move higher as well. So one of his suggestions on those EPs was looking at, this was about 7, maybe, it might have been 4 or 5 years of sort of stats there, looking at 1,200 EPs over a few years. So almost like a Borkowski sort of study, really in depth. but kind of made me sort of think there, and he basically quantified that episodic pivots, which is my game changer, into sort of 3 different types there. So of trade. So it was just interesting sort of study there, but just sort of saying that maybe those earnings gaps allow yourself a 1% move from the low, and then that's where your stop might be. So it might be harder, if you bought it up here and it came back down, a bit of a swing there. But yeah, but I think JBY is pretty interesting in some regard, because even though it doesn't look like there's too many sort of setups in there, if you look at this, its history, so it's been around for less than 2 years. It's only just been around just over a year, but it does indicate here 20% float, gets a bit hot early, which we know for IPOs, and then it does sort of have this A, B, C, and then it ends up sort of grinding another leg down. So it might have a A, B, C, D, E to a low here. But then we know that some of the biggest movers come from these newer names that are in the first 2 or 3 years. That's why I have them on my watch list there. And then what you're looking for there, you're looking for some sort of, if you look for these little B wave breaks here. So look, you might have thought this might have been one here, but then it didn't follow through, because that was probably the first little B wave there, and it didn't, sort of grounded out for a while. But you can sort of see this sometimes when these things get a bit of momentum, they start to break sort of highs that they can move there. I think it was I'm trying to think of the other float. Oh, there's another IPO there in the last response, but there's another IPO there which has only been around for about 4 months, and it sort of came back, did a little ABC, and then broke a B wave, and it's just gone straight up for like the last 4 months. So they can have big moves, the IPOs. So they're a lot more volatile. You need to give yourself a bit more room. You probably need to trade them a bit smaller. I think there's a book there, Life Cycle Trader, and she's also IBD Live. I'm trying to think of her name now, actually, but she's life cycle trader there. She sort of basically trades IPOs for that's her thing. So much more volatile, a bit more risky there, but some of the biggest gains are made. You're talking about there's some 50, 100, 150% moves in there. You're probably just going to get a bit chopped up a bit more in those IPOs, Chris, as well. But there's some big gains to be made in there, and that JBY just highlights that's exactly what we're talking about with IPOs there. I mean, once this thing started to break out here, look, you probably want to be sort of seeing it break a bit of a swing high in the past there. Some might have been sort of 17, 18 cents and stuff there, but it's gone to sort of 60 cents in pretty quick time. So this was one that I know people were talking about, this stock as well, as just being a bit of a mineral-rich area. So, but it just typifies a lot of IPOs. They come on hot and then they fade, and then they sort of build there. I think there's a bit of a a pattern there to those IPOs. So, but yeah, if you want to sort of learn about those, I think that life cycle trade. And she talks about the hook. She talks about like this little hook low and stuff there, when they sort of these IPOs, and then there's they're almost like a little hook bottom there. This might be a little hook bottom here. This it's what she's looking for. This little hook there or something. So maybe a little hook low. So just interesting if you want to sort of look at IPO. That's why let me go back to the daily here.
Kathy Donnelly, and then there are a few co-authors as well. So
yeah, who's the co-author there? Eve. There's an awesome IBD. If you Google her name, she does a really good summary of, I think, like Trade Align. So Richard Moglin interviews her, and yeah, there's an awesome video there on how to trade IPOs. So I think she covers it pretty well. I think she works for IBD. I think she just trades IPOs for IBD.
Right.
That's her thing. So yeah.
She might know a bit or two about an IPO.
Yes, that's right. So OSM is sort of one that's been pretty strong here. Had that little congestion in there, Chris, a little, high tight flag, a little bit of a VCP in here, and then did sort of break here as well. So even that sort of gave us a little break there around about sort of 32.5, 33 cents there. at okay volume here. Still looking pretty firm here. I mean, it's only had what 2 days down here, pretty light volume. It's had one day volume here so far, but still staying pretty tight here. So this is obviously, I'm guessing this is sort of something new here. So obviously this has been on its knees there for a while. Probably a change in character for the stock, maybe a change in asset or a change in direction. Probably something rolled in there and then up it goes. So this is like a new company here. So just one to keep an eye on. LRV. Again, there's another high type play. So this is sort of something you don't, I reckon you only sort of see this about 20% of the time, Chris, when you sort of see something have a really big move. That's gone from sort of 10 to 45 there, so it's up 400%. And then it goes into a bit of a corrective pattern. So it does have an ABC. So normally this would actually go through a longer pattern of pause. So it might be sort of 2 to 5 months of pause before it breaks out here. But you've got to keep an eye on these things. Sometimes they can see here that, it's had an A, B, C down here. The one thing you didn't see on that last leg down, you didn't see any selling there. So that should be, when you sort of see something like that, okay, that should alert you. So it's gone straight back up here, stayed under the high here, and then 2 days down here, not selling off here, and stayed tight here. So breaking above that little, that's a little B-wave break there. So what's that, 42? So you buy this up to say 43, 43 and a half. It's had a pretty nice move here, some good volume there so far. So not a bad setup there. It's just, you don't sort of see that often. I'd say probably maybe 20, 25% maximum. Most of them will go through more of, after having that really big burst, they'll go through a longer consolidation there. But just goes to show sometimes these, we're talking about most of them being in that sort of 2 to 5 months category. They can in there. So it's sort of one that I actually, I already marked this one off to put in my library because this is something which it can happen, so it's not the norm. Not saying it's out of character, but it's just sort of that it's a possibility, but one of those lesser possibilities that hasn't. But the setup is still pretty clean. Like you didn't see any selling on there, so that's why I know some people don't really. I'm big on volume there, but I personally think volume tells you a lot. So. Yeah, and if you study sort of a bit of Wyckoff theory as well, I think that's a couple of those good books there. Sort of.
David Weiss says you walk away with a good appreciation of what volume can tell you.
Yeah, so David Weiss's book on is very good, and the other one is the other volume book as well. There's trying to think who the
and not you, Cooling, is it?
Yeah, Anna Cooling. Yeah, that's very good as well. If you want to study volume, yeah. So those are probably the two best books in terms of sort of studying volume. Almost bar by bar. What's good volume, what's bad volume, and
very slow reads.
Yeah. David Weiss's books. Yes, he could literally spend half an hour on one page. So just because he does break it down, study bar by bar. It's just to the point where obviously, if you see a big wide range move, it should be with big volume because you should go through a lot of price steps. So if you're not going through price steps, like there's one there today, there's a stock that actually that I pulled back today that I was in, knocked me out of my part of my trade because I think it's broken there. But like this market is so thin, so it's come off. It's just basically broken, broke the 20 EMA, but there was no volume in it. I sort of watched it sort of sit there, went a little bit lower, but then I just didn't have any follow through. And it just sort of, the volume started to come back in again. I thought, this is just a little shakeout here. So I repositioned. I sort of had that, put the trade back on. So I got half of it done. So I don't know if I've been filled here until I finish this. But I just sort of could tell it was just getting a little bit of a shakeout there. So that's why, you got to have your rules and patterns there. But if it's not, if it's come off here in the first hour and there's no, first half hour and there's just no volume, no selling there. It just, and then all of a sudden the volumes come in and it starts building up again. It's like, okay, it's just, and we're seeing that quite a bit. Quite a lot of stocks here are sort of definitely moving down here, and it's not a market to be chasing too. Like, oftentimes I like to if it breaks a certain level, then I'll add to it. But it's sort of this is a sort of market there where it sort of break that level, which is a good sign, but then it'll fade back in the range, then go again. And the volume is just not sort of there. So yeah, this is a market where it's sort of requiring extra patience at the moment. So but that just sort of tells you, that's that's why I sort of like, with one of my rules there about selling to heat, Chris. If it's a hot market, I only want to sell a quarter. If it's a market that's sort of struck, that's not really firing, then I want to sell half into heat. Because more than likely at the moment, if I'd sell half into heat in the last couple of weeks, more than likely would have got it back on again 8 out of 10 times. So it's really sort of coming back in. POL, thought this is interesting there. Just look, there was a little bit of a congestion under the high there, but pretty hard to trade here. I mean, the only interesting thing for me is there is pretty good volume here. So this one just sort of goes on the radar for me because it's actually, I mean, look at that volume through there, pretty light volume all the way through. There's a bit of selling volume there, so it didn't look particularly nice. But it has started to build here, and this actually leg here has actually been accompanied by some pretty decent volume. So it tells me just to keep this one on the radar and keep a close eye on it there. LRL, again, is another one there with pretty chunky volume. So has been sort of building, so it's sort of gapped up, So this might be a little game changer sort of trade here, bit small, but it has sort of built on top of that, been building quite nicely there. Stayed above the 50 the whole time here. This is pretty strong volume there. So definitely going to watch the next consolidation on that one there. It's a little small for me, actually way too small for me. I've actually changed one of my rules there, Chris, because it used to be 30 cents there, but I just sort of find that anything under 50 cents, I'm just struggling to trade well. So I just, if I can't trade, 30 cents and 40 cents well, then just take them out. So now they've got to be 50 cents for me. So I'm just making it, yeah. I'm better at, I personally find I'm much more comfortable in liquid stuff as well. I just like to be liquid. I like to, if something doesn't look right and something's not performing right, I just want to be able to get out. And it's big percentage moves. That sort of 3 cents on 30 is 10%. So it's a big percentage move there. So you can't really gear up to as well. That's why it's limiting for me because it's sort of keeping my position size small. And just hard to trade. So yeah, like I want to be able to scale up and get big positions there.
A similar thing. A couple of years ago, I reviewed my trades, and I just bled too much under 50 cents, and just occasionally you get a gap through your stops, and 1-2 price steps just kept bleeding too much. So same thing. My returns tell me I can't trade under 50 cents, or I try to, and I don't do a good job of it. So I've just got to stay out of it, which is a shame because so many of these charts we look at, they're game changers, there's IPOs, there's high tight flags, and you put them in your playbook, but you're like, well, that's not for me, but I can tell what the formation looks like. So
yeah, it just makes it hard there. So having, particularly if you're reviewing your trades all the time, and you can kind of see it's sort of obvious. Then look, maybe there's some exception there. Something comes out and grabs you by the throat, once a year and stuff there. But really, I think you just got to stay away from that, stay in your lane there. And particularly if you are trying to, if your process does sort of suggest that you want to trade those sort of stronger names as well, more liquid names, and then you want to be able to scale up, and you're limiting how many positions you can hold there, it tailors yourself away from that anyway. So yeah, so really, I don't want to have any more than 7 positions. That's kind of one of my rules. And ideally, I just have 5 positions that I'll be able to scale up into. Yeah. But let's have a look here. So RXL, another one that's had a bit of a jump there, some decent volume in there. So definitely on the radar there. Just another one to sort of keep an eye on. There's no real sort of technical formation there, but just some chunky volume there. So just sort of suggest to keep an eye on that there, just showing a bit of strength there. Last one there was OBM. Just another one. Geez, just been so strong here, Chris. Still showing pretty strong volume here. So it's almost got that Spartan look about it in the first year. So very, very strong here. just strong volume there, and you can see there's very, I think there was a little bit of selling in here for 3 days there. It's probably, there wasn't, there might have been a day in here as well, but yeah, it's just one to sort of keep an eye on there. We just haven't seen too many. It's been pretty strong volume there on each of the rallies there. So this will be definitely one to keep an eye on there, because even though it looks like it's looks like it run too far here, but we know that sometimes these stocks here they'll tighten up here. So this will be one sort of keep an eye on there, and sort of you kind of want to watch and see how the volume trades on it. So when it does come off it.
A bit like Spartan, for those who haven't seen the model books, go have a look at the model books. Gary spent a lot of time and recorded it. They're long episodes, but you can jump through to the Spartan chart and you'll see exactly what he's talking about, because it's a really good lesson on how something like this can actually extend and put on another 200%. But that's digressing. Is that it for the momentum list, or have you got?
That is, yeah.
So obviously market leaders in the momentum list, and then we move to the launchpad. And what Gary's noticed and what data shows as well is that if we see something light up the launchpad, and what we're talking about is in these top 30 names, if there's a common theme, so if you see 4 or 5 uranium names, 5 or 6 gold miners, or like we saw before, 8 or 9 property trusts, hang on a second, something's afoot here. Quite often when they really concentrate into the launchpad, a couple of weeks, few weeks, sometimes it is up to 6 weeks later, that can actually be the market leaders. So before we look at the charts, is there anything that stood out this week, Gary, or is it sort of we don't have any massive highlights to share this week on the
I think what was probably interesting there was, Chris, was that if you look at the quarterly sort of stuff there, I think gold is in, gold miners, gold producers, everything gold. So all gold related sectors were the top 4 sectors, like for the quarter. Yet we saw a lot of gold stocks in this this launch pad here as well this weekend, which is actually not quite normal.
No,
because normally they come into the launch pad first, and then basically sort of we get 2 or 3 weeks in a row where they all light up the launch pad, and then we see them filter through to the quarterlies, and they stay in the quarterlies for a while. So this is not normal to be basically seeing a lot of golds in the in the launch pad there, and why is that? Why is that? So that, because I sort of think, well, this is a chart here. So this is Regis there, RRL. So look at that. I mean, that's basically, it's obviously showed a strength there, had that tight consolidation, and wow, look at this move here, $2 there to 280. So that's that's moving up 40%. That's a big move for gold plays there. So seeing this big volume there, big move here. So normally we'd be thinking that's the trigger for a for a big move to sort of keep running here. But when you're seeing like a lot of these stocks there that have been running for a while, Evolution, I think Northern Star there, I mean, they've really been winding up here. We've got this big move here and big volume. Is it at the end of this move here, Chris, as well? So I went back and actually studied some of the bigger volume moves on gold historically, and wondered how often they come in this late. Does that mean they can keep going there? And the one thing I sort of found was you can see volume come in late in the move, and it can keep going. But normally when you see a volume like this, it's either one or two things happens. It can be ending volume. So basically like that big volume that comes at the end. So it's almost, you got your last sort of hurrah buyers and sellers there. So it's almost distribution in some regard, even though it's going crazy. So it can end a move in some, well, in a lot of sort of circumstances. Other times there, it can be the move before the last move as well. So it can actually be, you can get this sort of like, it's like a wave 3, and then you'll get a cool off, and then we'll get another wave after that. So no definitive answer as to whether this is an ending move there. But when you do see the stocks getting vertical like this on big volume, it's time to be sort of tightening it. You should be, as we've seen with the strongest names, Chris, we talked about, whether like if it's moving sort of medium, your level here, you're probably using the 20. If it's starting to get vertical, like a Northern Star here, it's basically hugged the 10 here in the last 10 days here. So you'd be staying with this until it breaks the 10. I think RRL is probably the same level of that. Well, it's so strong there, but you don't want to see them break the 10 because this could be the end of the move. But more than likely, we'll probably just see a pullback. But those pullbacks could be like 3 or 4 weeks, come back quite deep. Could have like a like a little pennant, a little flag, or it could actually be like a descending wedge, and then you might get another leg higher as well. So just gotta be careful of these things here. Like they're all flying here, the golds. But yeah, it's weird to see that come in there in the launch pad there. It's sort of something we don't see too often there. So
I completely agree. We don't see that often where they've lit up, they've been solid on the momentum list for at least a week or so, and then they're showing up in the launch pad. There is an odd anomaly with the Gold Explorer group that you are talking about on the launch pad, because I'm looking at the numbers. There's 37 in the top 200 launch pad that are Gold Explorers. And this is a throwback from when gold goes on its runs. And anyone who's followed mining companies on the ASX will note this. If you have something out of favor like uranium, then any explorer who comes to the market in the last 3-4 years before the uranium ran, if they're doing early drilling and they note a bit of uranium, they really won't mention it. Or if they do, it's in the fine print. But as soon as it turns at the corner and the uranium's hot, suddenly they say, oh, by the way, we found uranium 2 years ago and we're going to go look for some more at these sites. And then they become uranium explorers again. So the throwback here with gold is the last few gold runs. What you'd had is you might have had a copper or a nickel or some other commodity, a miner who was focusing on that. And then when gold runs, they then also put their hands up and say, oh, we also have some gold in there too. And that helps get them more traction time and helps raising funds if they're depending on their burn rate. Gold tends to be that all-encompassing one because a lot of mining companies will say, we have these key assets, but we also have some gold over here. So I completely agree on the numbers. You're absolutely right. Just that gold gives us that little bit of an anomaly because there are so many companies that put their hands up throughout the period and say, oh, we do have a gold tenement over there. We're not actively running it, but hey, we do have exposure to it. We might sell it. Anyway, sorry.
Yeah, Tony, I think you make a good point there with uranium there, because it kind of, if you look at that uranium stocks there, you'll see those actually after being running for quite a while. The last leg up there was still pretty good volume. See that sort of pretty strong volume there on that sort of probably 4 or 5 days. I think they all had that move there. What uranium did actually, you had a pretty strong leg, then had this little tuck in, a little consolidation, and then a little last leg up there. So I think Bannerman there, I think Paladin did something similar as well. Pretty good volume there. Can't sort of see because it's sort of changed structure there. And then BOE is maybe a little less different as well there. But just you're definitely sort of seeing that pretty strong last leg up there. Had the one little consolidation went further. When I looked at a few weeklies as well, I saw a few that got really vertical like this, and then they pulled back for 3 weeks sometimes, and then had another leg up, and then that was the end of the move. So yeah, we've been running quite a while here with this gold, so they're still pretty robust there, but you just got to be. We're at that point there where you're just seeing unusual activity. Yeah, risk management there. Just you got to run with the strength, because we know you can run a bit further. Everyone thinks, but I'd be using some of those momentum levels there. RXL was sort of one that's popped here. I've mentioned that one already. IVR was another one that's had a bit of a run there. So just one to sort of keep an eye on there, just because it has had some reasonable volume here. PLT was sort of one I thought was interesting, Chris. It's sort of this is sort of Plenty Group there. I think they do all the car financing and stuff there. So it was interesting actually that they're actually talking that they've actually done a lot of Tesla sales there. And I noticed that they actually do the finance around the cars, and they do financing around energy, which I imagine is for the EVs as well. Obviously, to have an energy setup at home. But yeah, pretty reasonable growth in there. And so yeah, like I know that some of those sort of smaller financials have been doing all right, like Judo and PLT. So the sectors, the financials have been pretty buoyant there. So it's a little bit hard to trade this one here, but probably thought this one was okay because I mean, really that's had a pretty strong run, gone sort of sideways for a long period of time here now. So it's not showing too much weakness there, and yeah, pretty good growth in that last update. I got here, I mean, this one we talked about last week, a little challenger gold there, but still pretty small there. So it did break through, had a little bit of a VCP in there, broke through, but it hasn't really gone on with it. Still plenty of, still a bit of selling there. So it's not really showing that much strength there. Paradigm's a no here, still just, every time there's any good news there, it pops there and it just keeps fighting the tape. Chris, it's got a wall of sellers there. So this is a problem with stocks that are, that are in strong downtrends. Even when they have good news, there's so many losers who bought this stock a lot higher there that they're just going to sell into any rallies there. And you just keep seeing this with this stock here. Every time you think it's going to have a bit of a rally there, it just meets selling there. And that's the issue with bottom dwelling, is that there's so many losers in front of you there just looking to get out into any rally. BGL, so it's another Bellevue Gold here, so it's had a pretty nice move here, this one. So probably been a stock that's actually you'd say it's probably underperformed in the sector, so got dragged along here with everything else. But again, like kind of hugging the 10 at this stage there. I think if it broke the 10 there, you probably want to be out of it, just for the fact that hasn't been a leader, it's been a laggard. ARX I thought was okay here. It's still in still in a sort of strong downtrend there. Did see a bit of a BCP here, Chris. Is set above the 50, but not seeing any incredible volume there through there. No. So yeah, look, it's okay without being great, I guess.
So would that wouldn't make your trade list by the sounds of it? It's a BCP, the volume doesn't conform to it. It did break a B wave with an explosive move off the 10-day moving average.
Yeah.
No.
It's coming off, so it's got a lot of losers in front of it, so it's coming off here. So yeah. Look, there's some signs there, maybe some lights there. It probably just goes on the watch list for me just to keep an eye on it. But it's pretty nasty downtrend there, so I'd like to see a bit more building there first. Starting to realise with age here that you're better off coming in later on these moves than earlier, because if you just come in too early here, you're just sitting there. Oftentimes you can sit there for weeks and months, not making any money while the thing builds a base. I'd just much prefer to be coming in. That Minervini comment, sort of being in the market for the least amount of time possible. That just, that's such an important point about market there, because you can, that's why you avoid trying to pick lows here, because even if you do pick the low, so even if you are smart enough, we're talking about maybe a 1 or 2% here chance of picking the low. If you do pick the low, you could be there for 3 or 4 months waiting for the base to be built before you make any money. So even though you can say, oh, I'm the smartest bloke in the room, I pick the low, I don't make any money for 4 months. So what is that about? Is that about making money, or is that about ego?
I'll ask you, Gary, have you ever traded that within about 3 cents of the low? Are there any trades that you've done recently?
No, that's what I mean. I've gotten to the point now.
I think it was Ramsey, wasn't it?
It can't be about ego anymore. It has to be about making money. So that's and if you do all the homework and do all the stats, there, you realise, and if you've been in the market as long as I have, you know that trying to bottom dwell is it's just a lengthy process as well. Even if you are smart enough to get in near the lows, there is timing cycles and things like that. You're often there sort of sitting there, just burning cash there. That money could be basically going into things that are already going up, and you might have already you might be buying something which has already gone up 5 or 7 waves. But if it tightens up, consolidates, and the trend's strong, like, these things that have been running, they got to have it to keep running, So you want to be sort of, it's just like if you go whitewater rafting there, you're trying to swim against the stream there. So it's hard work. But, you know, you get to the sort of, you know, get to the near the bottom of the, you know, of the stream here, at the very end there, it's moving the fastest. So we know that with, you know, if you study sort of, you know, go and study every sort of bull market, you'll notice the last half of the bull market is a lot faster. So the first half is all about building a base, and the second half is sort of where, you know, and probably the last quarter is where half the gains are made. So, you know, you don't even have to be in the market for the first 3 quarters of the move. You can capture half the move by being in the last quarter of the move at time. So there's no rush to be sort of trying to pick lows. Yeah, that's just all about trying to prove to you that you're smart, which is, you know, that's the people who try to prove themselves to be smarter than the market. They're the ones that don't make any money, Chris.
Yeah.
So just get on board and, you know, what's the, you know, I love the Jeff Bezos, you know, if you get a rocket ship, you know, you don't ask what seat you're getting, you just get on, you know. So we just want to be trying to trade these stronger names there. I thought AOV was interesting here, just because it's sort of had a bit of a low here, and now has a bit of a base already been built here. So this is a classic one here. Found a low in May, gone sideways here for 1, 2, 3, 4, 5 months there. Had a bit of a jump there. It's a little messy, like it's volatile, up and down, up and down, up and down. So it looks like you're just range bound here, but has just sort of kicked up out of this range here. So okay, this is sometimes you can go to these, you know, build these big bases and go big range bound for a long time, and then you suddenly they come out of it, and then things can change here. So possible change of character for this one here after a bit of a base already. So definitely one to keep an eye on there. So yeah, I thought it was all right. The other one I thought was Bio was pretty interesting there. Again, look, this is a clear leader, Chris. Pretty, you know, showed relative strength there. It's been a strong stock here. This pullback there, as much as it's overlapping, hasn't sort of sat on top of. I mean, this one here sat on top of the high, which is pretty constructive. This one has overlapped here, still sort of hugged the 50 here so far. So you look through here as well. I mean, what I loved here at the end was that it was like 4 days down here. There's just no volume in there. So there's all of a sudden the selling, you know, it's had a bit of a pullback there, not really deep. So it's almost like it's struggling to go down. So, and then it pops up here, bit of volume here. So this one's pretty interesting there. Sort of the whole thing sort of tightens up in here. Maybe it'll do a little BCP in here. But it has done a little B wave break here. But like this market at the moment, you buy these breaks there, you know, they'll often fade and come back in again. So yeah, I might add a little bit on a break like that, but I'm looking to not get my full position on there because I'm seeing, I reckon 80% of them fade back into the range. So they might build, but I'm just finding that the market's not that strong here. So things seems to be sort of a bit dull here. So it's not a market to be buying. You know, it's not like a green light environment here where things are moving fast there. So I think you just got to be patient there. So it's funny at the moment there, if you're using your sort of 10, 20s and your 50-day moving averages there, they're probably working a bit better at the moment to help your entries and stuff there. So because we are sort of seeing the sort of stocks come back there. So but I thought that looked interesting. What was, I think, YAL, someone asked about that. I think, you know, I mean, the coal and uranium have been pretty buoyant there. So definitely sort of strong sectors there. Still pretty strong position here. Yeah, it's had a pretty strong move there. Looks a bit extended here, but still, you know, we know these can keep running here. So me personally, I'll sort of try and sell some into that sort of 3 to 5 day heat. I might take off half in this market, and then I'll let the other half sort of run there. So I think at the moment the 20 we probably, you know, is held there pretty well. So I'll probably be using that as my stop there. So it still looks pretty good.
And just while you're on that chart, what day number would we be up to now when you talk about selling into heat? does it start where it reversed in that first green bar, which is 1, 2, 3, 4, 5, 6 days ago? Are we into day 6, or is it after we break a B wave? Is that when it starts? When would you start counting your 3 to 5 day heat?
Yeah, look,
easier looking at June. That one's more obvious. But
yeah, you did get a nice little VCP in here. It's under the 50, but yeah, it did tighten up in here. Some okay volume into that low as well. Yeah, look, if you're lucky enough to buy that break here, you know, maybe this might have been your day here, maybe 1, 2, 3, you know, look, gotten back to the 50 there, maybe, you know, just because it's a pretty volatile share. I might have sold some into that day. If I not traded that one there, maybe just waited for this little congestion there, that was my sort of break here. Then 1, 2, 3, you know, the third day probably didn't end up being an inside day. So this is probably, you know, probably getting up here now. So I'm always looking for levels and stuff as well, Chris. You know, years of charts there. So that tells me that's an important level because that's previous high, previous low. So around 671. So probably just maybe, you know, sometimes I'll put things like 669 or something just under the sort of the big numbers there. You might trade some into that. I don't know where it traded. 669. So you might maybe don't, you know, be careful to get too cute. Which I have done in the past. So, but yeah, sort of just trade some out into that heat, and then just use a moving average. You just don't know this. You know, these things sometimes, you know, look like they've hit levels there, and I can just sort of keep going here. So you don't know. That's the thing. You don't know. You sort of, this is what, you know, you got to give yourself over to your strategy, to your process, and then just follow it. So whatever you're following, stick to it. So to me, I'd try and sell into that sort of 3 to 5 day heat, take half off, and then I'd let the other half run there. And I just let the moving average sort of guide me. What was the other one there? Sort of AL3. Did we cover this one? No, this is actually, it's quite nice, this one. So again, good signs there, because that's obviously had that big move, big volume, had the A, B, C back down here and then start to build here. So I mean, to be honest, there's a little B wave break around 15.5, 16 cents there, and been building quite nicely. So the thing with we know with these sort of stronger leaders, Chris, is they just keep making high low after high low. So this is our last low here. It's what, 15.5 here. So probably just wouldn't want to see that level get broken there. But looks kind of constructive there. So, nothing wrong with that chart at all. Triple T, I did look at this. I wasn't, you know. Yeah, it just sort of did break below the 50s, come back here. Look, it has sat on top of this move here. That's the plus. It looks okay without being great, I guess. So I just think this is quite a larger correction that's come back. But I do know that if they do hold on top of the previous swing high, it does leave them in a position to potentially go to a new high. So it could still go to a new high, this one here. So see if our weekly comes up here. Yeah, but see how long it's taken a long time to get there, Chris, as well. So it's pulled back here. A bit slow here. I mean, it's looking still keep going here. 13's the low last week. This week's going to be the low of 14. So yeah, look, it's okay. Okay. Not too bad actually. LRV, I think we covered that. Yep. AAR. Yeah, there's another one. It's not too bad. There's sort of smaller names there, so not for my liking there. But again, that's, you know, it's show relative strength there. Come back here, a little OVC, and then start to build here. That's probably our good little trigger in there. Stock that showed a bit of strength, pull back, B wave break in here, starts to move through. Did sort of cut through to a new high, so 52-week high might have been a place to add to it. Been nice and tight in here. It's been kept the place in place. So yeah, pretty constructive. Some pretty good volume coming in as well. So sometimes, like, you know, when you see a bar coming a bit late, that can be potential distribution. But if we see back-to-back sort of volume there, then it can be sort of positive for the stock as well. Can lead to more accumulation there. So that still looks okay as well. Is it NOU, the other one?
Yeah, I know you was on a request.
Yeah, yeah. Look, this goes on our list there because it's had a pretty big pop there. Just got to watch how it trades here now. But yeah, it's probably going to go through a consolidation there. So it just goes on our list and depends what we're looking for. This one as well, they're pretty small RSH. Again, had a pretty big move there. Not much of a signal in there. So there was a little bit of a tight congestion maybe underneath the high here. That's, if you saw that on a more liquid sort of a bigger stock, that'd be a pretty good sign there because that's sort of like it's had a pretty good move there. It's had a good volume into the high. And then we saw like, 3 or 4 days here, pretty tight, not much there. Had a nice bounce there. It's funny actually. I've been studying a few of these little shakeouts here, Chris. You see this little tight price action underneath the high. I think, that was pretty good there, and it is a pretty good sign there. But sometimes they can just get this little 1-day shakeout. So I reckon that happens probably 30-40% of the time, and then it goes. So you're almost, if you actually did see the little shakedown and then reversal, that's probably worth following. If you had those 3 or 4 days tight and then it looked like it failed and then recovered. So normally I'd say wait until it broke out, so broke out of this, so normally I'd say wait here, but if I saw this little throwback and then recovery, that might be where I put them. I might, if I saw something like that, I might put on 5%, like an early cheat there, because I think that is a pretty good sort of signal there. I just noticed a few of them, most of them stayed tight and then break up, but every now and again we do get a little throwback as well. But if it recovers, that's a really good sign there. So, yeah.
Well, just on that chart, it reminds me of one that you mentioned earlier. I think it might have been a reverse IPO. You'd noted this in the model books that a lot of the time you would have seen a change of character and the pace pick up when the catalyst might have just been going to a 52-week high. And then the behavior of that company really changes and the rate at which it rallies over that 52-week high. And is that like RSH kind of looks like it's almost done that at the same time? It did that kind of coil and that shakeout that you're talking about around the 52-week high. So how important is that to you to see the 52-week high and sort of trade with it?
Yeah, I think it's was more significant now having studied the model book. So having gone through those biggest leaders there, that's been I think it's been really important actually. Yeah. So I think it's really it's really important there. That one I was thinking there was TEA. That's the other Tasmea Limited there. So again, there's an IPO started hot. It's funny how these IPOs they come on, so if you get an IPO, if you can get access to IPOs, they're up 20-30% in the first few days. I'd almost say just take your money, wait for the fade, and then come back in again. If you really, really like the stock. But so that sort of came out here and gave us a little bit of a B-wave break here, probably on this day here in July. So that that would have been, say $1.56 there. So it's had a bit of a move, did threaten the 50 a little bit, then all that build up there, like so, that's nice there, sat nice and tight in there. So even if you missed this, if you had this chunky volume again gone to there's our 50 or 52-week high doesn't come in until this date. So even waiting for a 52-week high, that gets you in at what 188, 189 in September there. So that's important as well. So again, I think if you're looking at those sort of relative strength stocks and at 52-week highs as well, I know a lot of 52-week highs fail there. I remember Larry Height, who's a hedge fund, or actually I think Larry Height's the biggest hedge fund manager in the world. He talks about buying new highs as well, 52-week highs. And I'm sure he said that it's got a failure rate somewhere around 80%. Buying them, but the 20%.
They pay for it more than
they pay for themselves here. Yeah. So I think if you just bought 52-week highs and if you allowed yourself a 5% stop, on that 52-week high. It annualizes out, I think, over the last 50 years at around 20% a year return. But 80% of your trades get stopped out. So it's hard for the ego.
Yeah.
You know, I'm only right 20% of the time, but when I'm right, man, I'm making 50, 100, 200, 400%. So, yeah. I mean, but not every trader is comfortable with that. I don't know if I'm comfortable with that. I don't know if I can handle getting 8 out of 10 wrong and stay with it, you know, but yeah. But these are the beauty of different strategies, different processes there. They're all, you know, they're all there, but that's not bad. I'm hoping to get a higher win rate with you know, more than double that personally. So, so far I've done that more than twice. So I'm still trying to push the envelope and go a bit harder. So yeah, but yeah, each their own. But it's yeah, it's an interesting market here at the moment. It definitely doesn't feel like it's hot. It feels like it's a little bit in caretaker mode here at the moment with the US election coming up. So it feels like a little bit of uncertainty there. I think, you know, probably, you know, it's weird here because you normally get a little bit of weakness, but the normal pattern is the weakness into that election, and then the market to fire up out of that election. So even if you know, the worst outcome is a few things. I can remember when Trump got in last time, everyone was, you know, shit scared. I thought it was going to blow up the world, but the market ripped after he got in. So I think it went down for an hour and then went bang, and then it didn't look back. So that actually is the normal pattern. You know, you think about it rationally, it's about that uncertainty going into the events. You know, and markets don't like uncertainty. Then you sort of come out of it as well. So the market, anything that market is actually Trump's sort of favourite to win, and so a lot of his sectors are actually performing well, and the sectors he's against not performing well. So, so the market's already sort of getting aligned to that a little bit. So maybe there won't be too much surprise there, but obviously if Harris gets in, then it might change, or you might see a bit more volatility there. But we will see.
We'll see, and that once that uncertainty comes off, just on that for a second, some people do ask, well, what does that mean? And you've just described the sectors and parts of the economy that would favour from Trump are already sort of doing well, and that would be because capital has been deployed there, and there would still be investors, funds, institutions, think of large super funds that are holding back from an Australian perspective, but holding back deploying their capital because they don't yet have the certainty of who's going to be in and which policies will be driven for the next 3-4 years. So is that what they mean by the certainty? Once that uncertainty is removed, then those investors are happy to deploy the capital either through a Harris focus or a Trump focus. And then that is why the market's raw, not necessarily because the president has been great in their first day in office or their first month, but because the investors then have a clear direction of how they can deploy their capital.
Yeah, I think it's obviously there's a, you know, yeah, I guess it's like kind of markets climbing the wall of worry there as well. So, you know, I'm always get worried when there's no worries. So that's when we should start to get worried, when everyone thinks, you know, everyone can complain. It's almost like everyone turns bullish because all the issues are now out of the way. So that's when you do got to get worried in the market there. So I guess everyone gets nervous about US election. There's a little bit of uncertainty there. And people will be, you know, I guess it's like market lows as well. You're almost just sort of most scared when the lows come in. So, you know, that might be, you know, when the US election, you know, gets decided there, and you're probably scared as to what it means, what it follows, you know. So, but yeah, it's hard there. I think the 60-year cycle, which is the one I followed so far, it didn't have too much, you know. An election year typically don't have too big a moves either, Chris, as well. So you don't get sort of big moves there. You just get kind of you get a bit of a choppy yeah, move here. I think sort of September through December can be pretty choppy. You might get that little bit of a, you know, if you do get a little bit of a move back there, you might get the little end of year rip there. But yeah, sometimes they're from October, sometimes they're, you know, can be from late November. So yeah, just gotta see what the market sort of dishes up here.
Nice. Well, there's some insights to take away. We've got the market leaders, we've got the launchpad, some understanding of how and when you use it, also what you look at when you're looking for the trades, and how the US election can impact the markets. To that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary, we did talk about the model books where you put a lot of time and effort into that. We'll put a link at the end of the screen. It is really worth taking the time, sitting down, reviewing those charts. These are part of Gary's personal blueprint, his little playbook that he puts aside and references when he's looking for a trade setup. So it's well worth taking the time and studying those charts. And that will end this Friday. Didn't know how to wrap that.